Welcome back to Squawk Box this morning. Brazilian digital bank Nubank expected to make its public debut on the New York Stock Exchange today in what will be one of the biggest listings of the year. The Berkshire Hathaway-backed fintech player pricing its shares at $9 each. It gives Nubank a market value of more than $40 billion and instantly makes it Latin America's most valuable listed bank. Nubank also ranked number 40 on this year's CNBC Disruptor 50 list. Joining us right now, first on CNBC, is Nubank's CEO, David Velez. Good morning to you. Congratulations. It's quite a milestone and quite a thing to think about. This was your creation back in 2013, and here we are in 2021, and you may now have the most valuable financial institution in Latin America. Before we even just get into what's happening with the bank right now, just tell us the story.
Thank you, Andrew, for having me. So I'm originally from Colombia, moved to Brazil in 2013. I always tell the story when I had to go to a banking branch and open a bank account, and it was one of the most painful experiences I ever went through. I had to go to one of these bulletproof branches, a lot of security arms. It took me about an hour to get a simple bank account, get a credit card. And I started looking a lot about that industry and was very surprised about how concentrated it was. 5 banks own 80 to 90% of all the assets, investments, credit, lending in Brazil, in Mexico, in Colombia. And that to me seemed like a really great opportunity for disruption. It seemed almost impossible, frankly, to go against one of those big companies. But we were able to put together a very, very good team, focus a lot on the experience and the customer, and here we are. It's been quite a journey over the past 8 years and still a lot to do ahead.
You've had enormous growth that accelerated during the pandemic. Can you explain what happened and, frankly, whether it's sustainable at this level, if not more?
Sure, yeah. So we were growing very fast up to a pandemic, but people still had some questions about digital banking. I think the concept of saving your money in a digital bank, in a bank without branches, was scary for still a lot of people. They wanted still to go to a banking branch, talk to a banking manager. The pandemic, in a way, forced that behavior change among the most of the population. Because branches were closed, and so it wasn't even an option. And people start trying us, and they realized that it was a better option. We charge no fees, better customer experience, all in your smartphone. And suddenly we start seeing people in their 60s, in their 70s, in their 80s, people across the entire Brazil, all different municipalities in the north, in the south, using us. And when they started to use the product, they never went back. It was clearly a superior product. They liked our experience, and that has really accelerated kind of the growth. We now see that growth accelerating for us and are very excited to have a platform for effectively all Brazilians and Mexicans and Colombians where we are as well.
Right. David, your customer acquisition cost right now is quite low. $5 a customer, I think, by the latest numbers that I saw. Is that going to change over time? I mean, you're looking at a lot of customers who are just coming in organically, and that's great. But at some point, I imagine, as you grow, there will be an upper limit at which you're going to have to start to pay to try to bring more customers in.
Yeah, I think it's like a couple of things are happening at the same time. On the one end, there might be a little bit more competition, but on the other end, there is just much more supply of customers. Customers are now seeing this as the real option for banking. And so all these trends are playing at the same time. Net for us, we have not seen any change at all in our CAC, even after getting to almost 48 million customers, which would put us at one of the largest financial institutions in Latin America in terms of number of customers. So it is possible that at some point that happens, but we're also adding more products, adding more verticals, and ultimately having a better value proposition.
You mentioned competition, and there are sort of two fronts coming at you. Others that are trying to effectively ape what you're doing, meaning digital-only banks that are trying to compete with you, and the traditional banks, the legacy players who are desperate to try to both keep their customers, if not grow.
Yeah, no, that's right. So on both ends, there's competition. Ultimately, though, most of the customers are still in the big banks, and they end up having most of the 80 to 90% of the concentration of the system. But listen, the market is so large, and there is so much continue to prioritize growth. There is a lot of customers to serve, a lot of products to launch, and we ultimately think that we should continue to be focused on growth, obviously while looking at very disciplined investments across the entire company.
How much of the emergence of crypto do you think is driving your growth and the use case for your product?
Not much. We don't offer any crypto today. We have a couple of funds that have exposure to crypto, but crypto is still early in Latin America. So the story is a bit about disruption on the low end, is better products for the majority of people. And the infrastructure is traditionally, the legacy infrastructure is so expensive that there is a lot that you can do by removing all the branches and all the physical infrastructures and expanding access to financial services with no fees using the existing pipes of the financial ecosystem.
I was with the CEO of a major U.S. bank yesterday who's very interested in what you're doing. And I mention that because I think there are a lot of banks, traditional banks around the world, that are looking at this as potentially the future. If you were to look 5-10 years out, even in the U.S. or Europe, what do you think happens to the traditional banks relative to either digital players, or what does that look like, the branch system that we all come to know?
Yeah, so I actually don't think it's that much more different than what's happening in other verticals in technology. When you start seeing the transformation of technology companies in retail with companies like Amazon, or then in media with companies like Netflix, you end up seeing a couple of things. On the one end, some incumbents, some traditional incumbents that were able to really transform themselves, digitalize themselves, transform their culture, and have been able to compete very effectively with the new entrants. On the other end, also some incumbents that were not able to make that switch, and ultimately they're not around. We don't think the banking branch will subside, will really survive the way it is. It is too costly to serve the majority of consumers, especially in emerging markets where you need a very, very high cost of operations and cost to serve. So a lot of the physical infrastructure will probably disappear. It will remain in a couple of niches. But ultimately, most of the provider of financial services 5-10 years from now will be digital companies that will be focusing on the customer, will have a lot of efficiency, decreasing fees, and decreasing interest rates for everybody.
David, we wish you lots of luck. We hope you come on back.
Thank you, Andrew. Great seeing you. Appreciate the invite.
Great to see you. Thanks. You bet.
Thank you. Bye-bye.
All right, coming up, it's